Good afternoon, traders. Good afternoon, traders. All right, this is MUTFX at JP Markets. So today I'm gonna provide a technical analysis for gold, and I'm slowly transitioning to the stocks market. So right now, I've been studying gold. I've been studying Nasdaq. I've been studying Bitcoin versus USD, USD versus Japanese yen. I've also been considering, which one is this? Oil. Talk about US30. So I think for the coming months in this particular year, I want to focus so much on these particular stocks because that's where we got money. And when you understand how to trade them, it becomes very easy for you to make money in the Forex market. So right for a start, we are going to, probably look at gold. Okay, but let me just provide a sniper entry on Bitcoin. Since today is being a Sunday, the market is closed. And you see, every time I make use of my strategy on any pair, the strategy has actually proven times without number, 1,000 times, that it is a strategy that is a one-size-fits-all. So essentially, this is a breakout and retest strategy. So if you notice, this is gold. Initially, it was actually ranging somewhere around this particular zone, but then actually broke out right there. So a breakout at that particular level had to actually have the price go up and actually came down to this particular order block. Now, every time a particular Forex pair breaks out, it will always create an order block where it actually breaks out from. And in this particular instance, what you see is that it broke out there, came to retest around that particular zone and actually went up. So this particular zone that it created right there, all right, this rectangular, red rectangular chart I've drawn here is a demand zone that has been created by this market, and it actually will have to come and retest back to it. So what you can just do on your market right where it is right there is to spot when obviously it will break somewhere here. When it breaks somewhere there, it will actually drop down to there. So this is just Bitcoin and things like that. So let's get to gold, all right? Let's get to gold. So if you check on my dashboard here, I have gold, US30, US 100, that is Nasdaq, and then I have a Bitcoin. So let's get to gold, and let me just provide you with a technical analysis of this particular pair. But of course, our technical analysis today will actually take the form of a top-down analysis on the financial markets. We're gonna, understand how gold has been behaving and faring from the monthly time frame all the way to these smaller time frames like minute 1 as well as minute 5, and be able to see how we can actually catch sniper entry moves right on this particular pair. And not only that, we're also going to have our result and reference to an app that is investing.com, and then just be able to see how this particular pair obviously is faring on that. And of course, this is by way of looking at the pivot points, and also seeing how obviously we can just catch this sniper movements, especially when you look at the way it just spikes. When this pair moves, it literally moves. And basically what it does is that it will first range. Once it breaks out, it will actually range, and then when it is ranging, you just have to draw your trend lines pretty much well and then anticipate a breakout from either side. But let me not just get straight into the details of this particular strategy yet. Let's get first and start our top-down analysis of this particular pair, which is gold. Now, let me first just delete the drawings that I did on the pair. Okay, that's what we are gonna do. All right, just get rid of that. Let's just get rid of that. Okay, so that our chart is clean, and then we see. We come to the monthly time frame. We come to the monthly time frame, and then just be able to see how this pair has been faring. Okay, so right now where we are is that we have actually seen that this pair has been buying for a long period of time, and it is actually right still on its highest overbought levels. That is the price of 1865.19. all right, that is where we actually see this price being at. So we are going to right away start our top-down analysis on this particular pair, which is gold. When we look at this, initially, what this particular pair did was to, provide us with something. Let's just get this first done. All right. Let's see if we can get these things done that way there on gold. All right. So this is how gold behaves. And if you look at this monthly time frame, the price first had a touch or a high over that price there, okay, over that price. And initially, what had happened is that when it had the first touch over that price, which was at this level, right over there, it actually dropped. And when it was dropping, we can actually see that it broke this particular trend right down there. It broke that particular trend right down there, and that particular break of the trend signified the fact that the bearish momentum that it had right there when it retested up there to come to this level had been exhausted. And when it broke from this level, what it did was to actually first go back to that level, the price 2064.60, and then started dropping. All right, started dropping. And when it dropped, if you notice, it actually came to even break this particular trend line, changing the character of this particular market, indicating to us that it has changed character, and it dropped right there. Drops right down to this level. Then when it reached here, it actually started buying. And when it reached somewhere there, we see that it had the third touch right on this particular trend line, meaning this particular trend line still was valid. This is on a monthly time frame, guys, okay? That particular trend line was still valid. No wonder you are able to see that the price rejected from that point. That was just a retest. It just rejected from there, came down to open from here. So this is how we pick our top-down analysis. We are going to pick the price where this particular pair opened from. And that particular price is 121924.34, right? And right now where it is, the current price is actually at that particular level there, which is 1864.28. So what this entails is that this particular pair, which is gold versus USD, is just ranging in between these two prices, 1924.34, 1864.28. So our interest mainly is to actually understand the movements that this particular pair will have in these particular zones, these two red lines that have been drawn there. That is where our interest is, and nothing else, all right? Nothing else. So let's get started. The first price is 1924.34, and the second price is 1864.28. And so what we are anticipating here is that the market direction of this particular pair is that it is bearish. And you see, the date is just 12. This is 12th of February. And so we still have about 22 more days to go before this candle can close. So because of that, we just go straight to the weekly time frame and see what is obtaining there. Right on the monthly time frame, it tells us that it is dropping because a pullback up was merely a retest to that level. Okay, you look at the trend there. It was just merely a retest to that level. So when we get to our weekly time frame, this is what we are finding. This is what we are finding on our weekly time frame. Our weekly time frame is indicating to us that essentially that particular opening, which is 1924.34 down to 1864.28, just but gave us a strong bearish momentum signified by this particular candle that you've noticed here. Its formation is heavily and it's huge, and it's just, a long red candle. This entails a very strong bullish momentum, indicating to us that it is actually still dropping. It is still dropping. So like I always say, every time when you actually happen to execute your entries on this particular any pair, the supply or the concept of supply and demand is extremely important. So what we're gonna do is that we are going to have this trend line shifted to this particular point, right? We get that high there, we get another high here, something like this, right? Right. So we have this particular candle, which is the red one here, which somewhat broke this zone. This candle here broke the zone, and this particular candle that broke that zone created a demand right over here, created a demand. So now we are anticipating this price obviously to move from there to come down here, but if you notice, this is a weekly candle, and this particular weekly candle will actually close today at around 02 hours, all right? That is 02 Central African time. It will close around that time. Now, when it closes around that time, what will happen is that now we want to anticipate the status of this particular market for the next period of 1 week, that is 7 days. So that being the case, what we need to understand therefore is that it has given us an intimation and an indication that it is still selling. But what about the daily time frame? What is it giving us? So when we come to the daily time frame, what we are understanding or what we are seeing is that initially this price, like earlier indicated, broke out this level here on a daily time frame. And actually when it broke out, since it broke out from there, it came back to retest at this particular level right here. Okay? And when it retested there, it actually bought from here, went up to that level, right? Went up to that level. So where we are at the moment is at this level. This is where we are at the moment. This level, you seen this? You do that. And then after that, you also get the lows here. You connect the lows right down here. Okay? That is a zone that it has given us. Our area of concentration at the moment is just right in between this region. We are trying to define market direction of this particular golden pair. So, if you notice, we first had the 4 bullish candles that, of course, have been attempting to occur progressively, ensure that buyers are still in the market. So you had the first candle, second, third, and fourth. Then the 5th candle was supposed to actually form and go up, but if you notice, it was rejected. It was rejected at this particular price, right up there. It was rejected there, and then it actually started dropping. It started dropping and came to only open at this price. It only came to open at that price. So it is extremely important in the financial markets. These are what we call pivot points. Okay? The highs, openings, closing of a previous candle. These are pivot points. So we actually come to here. Okay? The subsequent candle that will form is likely to retesting those levels. These are pivot points. So we had this market first reaching its high at 1889.68, and then it came to drop and opened at 1874 0.84 and came to close at this price, right? It first came to find its low here, which is 1859.25, then came to close right there. And if you notice, you realize that the close of this particular candle was the opening of the current daily candle that is forming, right? The daily candle that is forming. So meaning therefore that this candle by 02 today, this candle would have actually finished forming. And you see, since this is 02, this is 02, what will happen on this pair is that at 02, this particular candle actually completely form. So we go to, and what the intimation that it is giving to us here is that initially, what happened was that there was this extension. So if we are going to extend this trend line right there, and then we have this moved here, you realize that it broke out, okay? This particular candle broke out, and there could be an interest of the market to go test the supply zone that was created by this break, which is the zone between the two prices, 1889.68 as well as 1874.65. This particular bullish movement that you're seeing right over there might be an attempt to retesting that particular zone right in that particular two prices that I've indicated to you. Never mind about the charts that I'm putting on this particular screen, but always concentrate on the numbers and the figures that I'm giving for you to follow quite accurately. So this is the daily time frame. Now, having understood this, we come to an H4. Already, you have actually noticed that from the monthly time frame, we have been having a picture of it being bearish, but when we came to the daily time frame, we are seeing bullish sentiments, okay? Smaller bullish sentiments with our pivot points being 1874.65 as well as 1889.68. So what we are going to do is to actually switch to H4. So when we switch to H4, this is what we are finding on H4. So right here, let me just obviously indicate something to you guys. Let me indicate something to you guys. If you notice, it is extremely, those charts that I've put are actually still accurate, even right on this particular pair. We have this, right? We have these levels right here. Okay, we have these levels right here. And then what we have is that there's this candle that has broken this particular trend, which is this one, the red one, this one that I'm actually circling right there. That's a candle that broke this particular trend. Because this candle broke that particular trend, there is a likelihood that this market might actually come to retest its zone that it created, the supply zone it created right on top there. And that's the reason why you are seeing a seamless double bottom forming here that will actually be like this. The movement from this particular move, right? Let me just clean the screen for you so that I don't confuse you. So I indicated that there was a break right there by this candle here. By this candle here. That was a break of this candle is the one that broke the structure. There was a break right there, right? There was a break right there. Do that. There was a break right there. So if you notice, that particular break that this particular pair had was a pair obviously done by that particular candle. And you see, every time there are those breakouts being issued, what happens is that the price mostly creates a supply zone on those particular pivot points. So the pivot points here happen to be our high and the opening of this particular candle. And when you notice, you find a bullish sentiment. A bullish sentiment, and we have a neckline of a double bottom right down over here. So if the market breaks 1866.06, then we can anticipate a move to that particular zone in between there. So let's get to H1. You're seeing what is happening on H1? On H1, what we are seeing is actually exactly a double bottom that is actually forming. There's a double bottom that is actually forming right on H1. This is a technical analysis on gold, guys. So we have that, and we have a double top that had formed there. But we are not yet sure whether this is what are going to happen. We are actually going to be sure once we actually reach smaller time frames like minute 1 to see what this particular market will have given us. This is it. So after this has happened, after this has been done, we actually come to M15. So on M15, this is what we are finding. On M15, this is what we are finding. Do we have a change of structure on this particular minute time frame? So we are going to connect the highs there. We are going to do that, right? This is what we are going to do. We are going to do that, and if you notice, there has been a break right there. There's been a break sentiment right around this area. So meaning that this particular market has not respected this particular pair to actually go down and become bearish, but it is still buying. So this particular break, if you notice, when you zoom out, this is what the price has done. If you notice, this particular candle that is forming right now is extremely bearish with a high momentum, with high bearish momentum right here. This is the candle that we are interested in. Right there, the one I've just circled there. This is the candle that has actually, broken. So we have noticed that on M15, it has actually even broken that particular structure. So we are anticipating this particular scalping move right over there. So we are going to come to M5 and see what M5 has for us. And even on M5, you can notice a break of market structure right there. It has broken this particular structure. It is actually going up right there. We come to M1. This is what we are finding on M1. This is on gold, right? This is on gold. This is on gold. This is what we are finding, gentlemen. These are the sniper entries that you can make. Okay, we have a break right there. We also had a break right here. Okay, and it gave us those particular zones, and so we could have entered right there. But of course, there's a breakout there that it had. Might come to retest before soaring up. So this has been a top-down analysis on gold. After that, let's just get to investing.com and see, obviously, whether there is any form of correlation between what I have actually analyzed here and also what this particular app is giving us. Sometimes you just use it to obviously just confirm your analysis, your technical analysis, but this is just, like I indicated, purely technical analysis. It is not the actual thing that this market will make. So this is gold, okay? This is gold, and we're going to have the technical side. Okay, so this is, if you noticed, minute 5, it is indicating that it's going to be a strong buy. Okay, 30 minutes is indicating that it's going to be a strong buy. Hourly, it's actually going to be neutral. So obviously, it could be that it would want just to go and retest that particular zone that I indicated to you guys. So when we scroll down, we are going to see that there's R1, R3, R2, R1. So the resistance 3 is actually 1877.20, and that is 1876.45. Then R2 is 1876.45, 1875.88. So what we are going to do is that we are going to jot down these particular prices. So the third resistance here is actually 1877.20. Okay, then the Fibonacci retracement is expected at 1876.45. Okay, that is what it is. Then when you look at the supports here, the lowest it could ever reach in terms of support is 1872.70, right? That is the support. Then the Fibonacci support is at 18 1873.45. So the actual summary is that it is actually buying, okay, for that particular period. But then when you look at the daily time frame, the daily time frame also, it is indicating to you that it is neutral. Then when you come to the weekly time frame, it is actually indicating to you that it's a strong buy, right? When you look at the monthly time frame, it is indicating a strong buy. M15 is indicating a strong buy. M1, it's indicating a strong buy. So let's get back to our chart and then get to these particular figures so that we just add a point of double confirmation to our analysis that we've been actually making, right? Let's just do this. So this is what this particular market is giving us. So the resistance 3 is at 1876.45, all right? 1876.45. So we are going to do this and search for that the figure 1876.45. All right, roughly there. So roughly there. So according to this particular investing.com, this price, this bearish move is expected to reach there. Okay, it is expected to reach there. Then what was its support, which is the Fibonacci support, is actually expected to be at 873.45. Okay, 873.45. Okay, 873.45. 873. Yeah, somewhere there. Of course, that is after it has made this particular move right there. Like I indicated, it has actually broken this one right there. It has broken it. So it's expected to move and have that particular move. Okay, ladies and gentlemen, this has been your boy, MUT for FX at JP Markets. We've been trying to, provide a technical analysis of gold. And I must indicate to you, gentlemen and ladies, forex traders across the world, that mostly when you happen to have this particular strategy, it is actually working on almost everything. So I call it the breakout and retest strategy. That is, of course, coupled with what I call supply and demand, right? Supply and demand. And mostly, when you use it, it's actually going to give you actual results, all right? It has actually proven to be a strategy that you can use on almost anything, okay? It has been proven to be used on almost anything. It is actually going to give you results. Talk about VIX 100, VIX 75 1S, VIX 50 1S, boom and crash, almost everything. This is a strategy that has actually proved to actually have results. I'll also do another one for Nasdaq, and of course Nasdaq also is seemingly giving us the same index. So this is it. Okay, I'm not yet funded my account, so I will when the markets open, and then I'll be able to get into this. So you see, this is step index. So quickly on M1, we just do that. See this? We just do that, something like this. And if you notice, the breakout happened at this level. And if you're noticing what is happening, this particular price just came to retest in that particular zone, and you saw it is dropping down there. So this is all you have to do, and then you are in for the monies, right? Enjoy your trading. This has been JP Markets, providing you an analysis on gold as well as synthetic pairs. So VIX 100, where are you? This has been VIX 100. It's been buying, but of course it was just retesting a certain level, so it's selling now. So this is what it does. So it just came to retest this zone right here, and it had to drop because of these two levels right here, these two levels there. So it came to create a low down. It came to create a low down here, and so it is actually coming to break this low down there. So it just went up there. So this particular pair is actually going to sell until it reaches down there. That is on H1. Then M15, this is what it is giving us. So this is what is happening. Then we come to M5, something like that. So it's going to dance a little bit there because of this right there. But then it is going to drop down here. When you come to M1, this is what you're having. So on M1, it has just been giving us breakouts here, creating and forming higher lows as well as low lows. So basically, this is just what you do in order for you to have those sniper entries, and you are good. You are good. Have a good day. May God bless you.